In this video, we first examine the different parts of the inverse head and shoulders pattern. Then we will have how to form the inverse head and shoulders pattern. Then we examine the steps of the inverse head and shoulders pattern. Finally, we will have how to trade the inverse head and shoulders pattern. If you are new, welcome to my channel. Be sure to subscribe to my channel and hit the bell. Be sure to comment your opinion to improve the video. Different parts of the inverse head and shoulders chart pattern. One left shoulder. 2 head. 3 right shoulder. For neckline, resistance. How our inverse head and shoulders pattern is formed. The inverse head and shoulders, or inverted H and S pattern, is formed at the end of a downtrend. Is the inverse head and shoulders bullish or bearish? It's a bullish pattern that predicts a reversal from a down to an uptrend. It's the opposite of the head and shoulders setup, which appears at the end of an uptrend and signals a coming price decline. Similar to the head and shoulders formation, the inverse consists of 2 shoulders and a head, but they are reversed. It's vital to remember that the inverse head and shoulders pattern can't appear in an uptrend, and the head and shoulders formation can't exist in a downtrend. Inverse head and shoulders is similar to the standard head and shoulders pattern, but inverted. It may be used to predict reversals in downtrends. An inverse head and shoulders pattern, upon completion, signals a bull market. Investors typically enter into a long position when the price rises above the resistance of the neckline. How to identify inverse head and shoulders? Prior trend. It is important to establish the existence of a prior downtrend for this to be a reversal pattern. Without a prior downtrend to reverse, there cannot be an inverse head and shoulders formation. Left shoulder. After a downtrend, the price of the respective asset makes a low and then rallies to a higher point, forming the left shoulder. Head. Following the formation of the left shoulder, the price declines to a point lower than the left shoulder and then rallies again, forming the head. Right shoulder. Finally, the price declines again but not as low as the previous decline or the head, and then rallies one more time, forming the right shoulder. The right shoulder is typically roughly equal in depth to the left shoulder. Neckline. A trend line is drawn connecting the high points, or peaks, after the formation of each shoulder and the head. This line serves as a level of resistance that the price must break through to confirm the pattern. Neckline break. The inverse head and shoulders pattern is not complete, and the downtrend is not reversed, until neckline resistance is broken. For an inverse head and shoulders pattern, this must occur in a convincing manner, with an expansion of volume. Volume. While volume plays an important role in the head and shoulders top, it plays a crucial role in the head and shoulders bottom. Without the proper expansion of volume, the validity of any breakout becomes suspect. Resistance turns support. Once resistance is broken, it is common for this same resistance level to turn into support. Often, the price will return to the resistance break and offer a second chance to buy. Price target. After breaking neckline resistance, the projected advance is found by measuring the distance from the neckline to the bottom of the head. This distance is then added to the neckline to reach a price target. How to trade inverse head and shoulders pattern. By signal. The trader could enter a long position when the price breaks above the neckline, preferably on high volume, or when price returns to test the neckline. Stop loss. In order to manage risks, the trader should place a stop-loss order slightly below the right shoulder or the neckline to minimize potential losses. Position sizing. The trader would also determine the size of the trade based on their risk tolerance and the distance between the entry point and the stop-loss. Target price. The trader should calculate the target price by measuring the vertical distance from the neckline to the lowest point of the head. This value will be added to the distance at the breakout point at the neckline. Take profit. The trader should exit the position when the price reaches the target level or shows signs of reversing. Trailing stop. Alternatively, the trader could use a trailing stop to capture additional gains while protecting their position.